What's going on, guys? Welcome back to another video. So in this one, we've got some super rich people acting like absolute degenerates in the public markets, or otherwise known as the stock market. Now, typically, these hyper net worth individuals are going to be relatively smart. Now, if they then think that they are, one, smarter than everybody else, or able to outsmart the market, thinking that they know something that everybody else does not, well, the outcome can be absolutely catastrophic, which is what we're going to go over here. Now, guys, there's a lot of lessons in terms of risk management and what is actually going on in the markets too. We have a very interesting situation here that I want to cover with you guys. So if you wouldn't mind hitting that like button down below, it costs you absolutely nothing to do it. It helps us out a whole lot over here. Make sure you guys drop a comment down below and subscribe if you want to see more videos like this. But without further ado, let's roll the intro and get right into it. Now, guys, before we go any further and actually talk about the information that we need to, I have a special announcement for you guys that are watching this video right here, and it is just for you guys. So right now, Trade1348.com, the absolute best place for new retail investors and experienced traders to come and actually learn to trade and hone their skills, is offering a very limited time 1 month free trial to the platform, the absolute best place to come and learn to trade. You get all of the proprietary predictive AI algorithms. You get all of the alerts, all the real-time unusual options activity, all of the learning curriculum videos. Guys, this is something that you do not want to pass up, especially if you are struggling in the markets right now. If you're interested, make sure you guys check out that link down below and use code GAINS. But remember, this promotion is not going to last for very long, so make sure you guys get in while you still can. But let's talk about the situation at hand here. So first, Carl Icahn. For those of you guys that do not know, Carl Icahn is a very famous activist investor in the financial space. He had a very interesting battle with Bill Ackman over Herbalife. He's had a lot of controversy in the past, and people do have a lot of respect for this individual in the wealth management industry. Now, what has happened recently? Carl Icahn admits mistake with bearish bet that cost $9 billion. If I kept to parameters I always believed in, I would have been fine. Guys, this is such a crazy example of risk management here, but I want to go over a little bit further exactly what happened. Carl Icahn has admitted he was wrong to make a huge bet that the market would crash after the ill-fated trade cost his group nearly $9 billion over roughly 6 years. According to a Financial Times analysis, the prominent activist investor lost about $1.8 billion in 2017 on hedging positions that would have paid out if asset prices had tumbled, before losing a further $7 billion between 2018 and the first quarter of this year. I've always told people there is nobody who can really pick the market on a short-term or an immediate-term basis, Icahn told the Financial Times in an interview to discuss the analysis. Maybe I made the mistake of not adhering to my own advice in recent years. Guys, when we are approaching the markets every single day, and I have said this before, and there's a very interesting quote that I forget who said it, I saw it on Twitter, but success breeds complacency, complacency breeds failure, only the paranoid survive. In this situation with Carl Icahn losing $9 billion of his and investors' money, well, he had a lapse of judgment. He thought that he was smarter than the market, got arrogant, got cocky, and what happened? The market slapped him in the face. So when we think about these situations here, a lot of you guys watching these videos like to hold these high net worth individuals managing large amounts of capital to an extremely high standard, but they are not immune to these lapses in risk and emotional management. What we can see here is, and obviously, if we were to look through a lot of these positions, it would be very obvious, especially with the tools on Trade1348.com, that these positions were not going to play out in the way that Carl Icahn's fund thought they were. But what did they do? They did not get out of these positions. When you think about risk management, guys, and emotional management in the market, it's the most important thing. And I use this example a lot. Let's say, for example, that you had a strategy out there that had a 99% win rate. Now, you're going to make money most of the time, but if you have zero risk management, the 1% of trades that you lose is going to wipe out your entire portfolio, fund, whatever, every single time. What you need to be doing in the market, guys, is not this. Again, Carl Icahn has had very significant amounts of success over the years. But like I said before, he is not immune to these types of emotional and risk management lapses in judgment. Now, guys, we see these blow-up situations happen with either fund managers or more recently with all of the regional banks. Time and time again. And why does this happen? Well, when you look at the actual situations going on in the market, is it greed? Is it lack of understanding? Is it lack of risk? Well, most likely it's going to be a culmination of all of those things. But what does that tell us? Well, it tells us, like I said before, that nobody is immune to these types of lapses in the market, but it also tells us something about the market. There is a saying out there that the market is not going to collapse when everybody is watching. Now that a lot of these institutions are being taken out, well, it is very possible that if we are going to see an event where markets do start to sell off here, that it could now start to be more aggressive because there is less hedging to the downside or less funds taking these large positional bets to the downside, especially with what we've seen recently over the last couple of weeks. The economic data is starting to look a little bit better. We are seeing this AI boom, which we also have to talk about right here as well. Now, when we think about the market here, and what a lot of these large institutional investors do, well, they're using what's called fundamental analysis. And a lot of that comes from discounted cash flow models. We've been over these a lot in the past. And what they do is they create estimates and growth rates for future revenues for a company, mainly over the next 10 years. They have a terminal value, which is effectively what the actual valuation of the company is going to be or estimated to be after that 10-year period. And they discount those cash flows all the way back to the present to get a present value. And that is what the company's current fair value is. Now, I said this on Twitter recently that we are either in one of the largest bubbles of all time in terms of fundamental valuations, or the classical methods of fundamental valuation are no longer super relevant in the marketplace. We've had low rates for about, 12, 13 years. We've had significant money printing over the last 3 years here, and we are starting to see some of that money getting sucked back out of the market. But again, those effects are here to stay. So it's one of the two. But when we look at this right here, this is incredibly interesting when what we're looking at the market. The S&P is up 8% in 2023. Without AI, it would be down 2%. Below 3,800. In the past month, we have discussed on multiple occasions the unprecedented collapse in market breadth. Now, if you don't necessarily understand what that means, again, there's a lot of people and a lot of terms getting thrown around in the financial space to make all of these people try and seem smarter than what they actually are. When we come over here to Investopedia, what is market breadth? Market breadth indicators analyze the number of stocks advancing relative to those that are declining in a given index. So it's basically saying which stocks are going up, which stocks are going down. That's effectively what this means. Now, coming back a little bit further and we think about market breadth, well, a lot of these AI stocks are going absolutely insane. We've seen the run of NVIDIA. And again, when we go over here and take a look at NVIDIA on the daily time frame here, you have one of these Trade 1348 traffic lights on the daily time frame here on January 23rd. This would have alerted you, let's see, at 163. At the current time that I'm recording this video, NVIDIA is trading at 312. Life-changing money there, huh? All right, so coming back over here, when we take a look at exactly what's going on, as SocGen's Manish Kabra writes, the AI boom and hype is strong. So strong that without the AI popular stocks, the S&P would be down 2% this year, not 8%. Okay, well, that's a very interesting statement that a lot of these companies, or a small portion of these companies, are bidding these indexes up. And that's going to hurt a lot of these funds that are short equities. So what this really means at the end of the day is, yes, you are going to see these large institutional funds, if they think that they are smarter than the market, start to blow up. Now, a lot of these other funds, though, are going to have so much money sitting on the sidelines that even if we were to see somewhat of a sell-off, well, a lot of this money is going to start flowing back in after we come into the end of this tightening cycle that we are seeing with the Fed right now. So when we look at these situations here, and the one thing that I really want you guys to take away from this video is you have to be a little bit paranoid when you're approaching the market. Any single day, it is up to you to make sure that you are managing your risk appropriately. Now, we teach you guys how to do that every single day on Trade1348.com, but for those of you guys that aren't on there, you guys, it's the most important part. Risk and emotional management are going to be the keys to your profitability every single day. Billionaires aren't immune to this. You're definitely not immune to this. So guys, that's going to wrap up this video here. If you did enjoy, make sure you guys hit that like button down below and make sure you take advantage of that free trial to Trade1348.com while it still lasts. Other than that, team, have a great rest of your evening. Peace.